JJ the CPA here, hope you're doing well. So when we're talking about why be an S Corp, the first thing I want you to note is that it's never LLC versus S Corp. An LLC can be an S Corp. An LLC is your legal designation, because an LLC can be an S Corp, a partnership, a C Corp, or a sole proprietor. It's a chameleon. LLC is something that you set up at the Secretary of State. It's your legal entity. Anything else related to your designation of how you're classed for IRS purposes is then only with the IRS. So why be an S corporation? Well, if you're going to be active in your business, an LLC taxed as an S Corp is going to lead to no self-employment taxes. That's really the number one reason why you would be an S Corp versus being a Schedule C filer, meaning a sole proprietor. When you're a sole proprietor, the net income on your Schedule C is subject to 15.3% self-employment taxes. The net income from your S Corp is not subject to corporate tax, and it is subject to income taxes at your individual level, but it is not subject to self-employment taxes. So what's the number one reason? You save self-employment taxes of 15.3% when you're an S Corp versus a sole proprietor. You net $100,000 as a sole proprietor, you pay $15,300 more tax on your individual return in addition to your income taxes as compared to someone who's an S corporation, because an S Corp that nets $100,000, there's zero self-employment tax. Right there, there's a difference in savings of $15,000. And guess what? That's not even just for the 1 year. It's forever, year after year, that you save this. If you're actively involved in a partnership, that net income is subject to self-employment taxes. So if you're going to be actively involved, you wouldn't select to be an LLC taxed as a partnership, because it puts you in the same position as if you were a sole proprietorship, where the net income is simply subject to self-employment taxes of 15.3%. There's one catch with an S Corp, and it's not a reason to not do it. Because I'm telling you right now, after 30 years, all of the clients that I work with that are actively involved are S Corps. I don't have any clients that file a Schedule C, period, the end. I don't have any clients that are actively involved in their partnership. Remember, an LLC is just your legal designation, right? So the S Corp, you do need to pay some reasonable wage, but at the end of the day, that wage is going to be less than the net income that would be taxed at the sole proprietor level. So in the body of this video, I'll give you a link to the Form 2553, which is what is required to file with the IRS, because that's in essence how you elect to be classed as an S corporation with the IRS. So you're an LLC, and then you select how you're taxed at the IRS level. And so if you're actively involved, your LLC should be taxed as an S Corp, period. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. Have a great one.